Okay, hi everyone. My name is Piyush Varshney. I'm the president and CEO of Canada Zinc Metals Corp. So yes, I guess we're staying on the theme of zinc, and I guess others have already talked about the general market for zinc, the bullish forecast for zinc on the demand and supply side. So we'll go straight into it. Canada Zinc Metals Corp. We're based in British Columbia. I just want to at the outset say we don't want to be confused with Canadian Zinc Corporation. There's another company with a similar name. Canadian Zinc Corporation is a different jurisdiction. They're in the Northwest Territories. We're BC. So we're actually going to be changing our name probably early in the new year to distinguish ourselves further from Canadian Zinc Corporation. We've got two main projects. One is the Acai project, which is where we've defined about a 30 million ton resource. It's about 10% zinc lead, 8.5 zinc, 1.5 lead with some silver. So very good size. It's open for expansion along strike and at depth. And the second asset is the Kachika Regional Project, which is a 140-kilometer stretch of very prospective claims next to the deposit, 80,000 hectares, truly is a district-scale landholding. So there it is. So the main project is the yellow on the map, the Acai project. We also own all of the pink, and we own all of the red. So again, truly district-scale. The blue are owned by Teck and Korea Zinc. So the Cirque deposit, the blue mass right there, that is only 20 kilometers away from our Acai deposit. And the pink section are actually earlier stage claims of ours that Teck and Korea Zinc have optioned from us. So you've got a major zinc miners actually spending money exploring a junior's early stage exploration on those three claims. These are SEDEX deposits. Most of the biggest zinc systems in the world are SEDEX systems. That's what this is here. So we're confident that there's a series of deposits to be found along this entire trend. So we are the dominant landholder in the Kachika Trough. We own our projects 100%. Currently about 6 million in the treasury. We do about 250,000 shares of volume a day. You can see the share chart. You know, what we've been able to attract due to, I guess, the scale of the main deposit, the district potential in terms of discovery potential, the jurisdiction being in BC, are large base metal mining groups as shareholders. Tongling Non-Ferrous Metals is a state-owned enterprise out of China. They're our biggest shareholder at 30%. It's a passive shareholding. They don't have any rights to concentrate or offtake, no anti-dilution rights, but they're our biggest shareholder. Jintao is a Chinese investment group, again, a passive shareholding of 6%. Teck and Korea Zinc, our neighbors in the district, happen to also have a small shareholding. But for us, the bigger thing with Teck and Korea Zinc was getting them to option those earlier stage claims and actually spend money in the ground. And then if you take management at about 9 to 10%, about 45% of the shares, again, don't trade and held in tight hands. And frankly, you know, I was in Tokyo and Hong Kong about a month ago, and from the meetings in Tokyo, one of the large groups we met has reached out and are coming to meet us next week. They're going to site. So what we have here is of interest to large base metal mining groups for sure. So myself, I'm a corporate lawyer by training. You know, one of the companies that we've been involved in from the very first drill hole, the discovery hole, was Mountain Province Diamonds, which is a diamond mine that's been constructed in the Northwest Territories of Canada. Our group was, again, involved in funding the discovery of that. And then over time, De Beers has come in as a joint venture partner. The mine was constructed at a cost of about $1.1 billion, and you know, our family went up there for the mine opening. But that's, you know, we stay with these projects from early stages right through to, you know, obviously trying to maximize value for stakeholders and ourselves. Dr. John Thomas, a PhD in metallurgy, he's on our board. Marco Strub's a portfolio manager in Zurich, he's on the board. Ken McDonald is our VP exploration. Ken's very strong technically, but what he also does is he brings to the table a skill where he actually worked for the BC government in the Ministry of Mines and Energy for about 10 years. So Ken knows the permitting side of things extremely well. And he has worked on projects where he's got them shovel ready, got all the permits in place, and they've been taken over by other larger mining groups. So certainly that potential exists here on the Acai project. Get it totally shovel ready. Given the interest from majors we've already got, there's a good chance that an overture could be made. So there's the project in northeastern British Columbia. Right now you can drive to the project all year round. There's heavy duty forestry roads, so we don't need to build roads. Those roads extend down to the town of Mackenzie, where existing rail goes down to Teck's zinc smelter in Trail, BC. And the rail line also goes to Prince Rupert, a deep sea port, for shipping to smelters in Asia. And then the largest hydropower plant in BC is on Williston Lake, the WSE Bennett Dam. So, you don't need to build a road, you don't need to build railroads, and there's power in the area. So the infrastructure in the area is actually quite good. Work we've completed, 112 holes making up the block model. 71% of our resource is indicated category, so high confidence. We have the plans. We've done the geotechnical drilling. We've done the engineering. We have the underground permits in hand to actually go underground on the main deposit. And of course, the engineering baseline studies and environmental baseline studies are up to date, which helps us secure the permits necessary to move the project forward. So there's a long section of the deposit. The red is the indicated category. The yellow is inferred. Again, it's open along strike and it's open at depth for further expansion. And we're finding the grades are actually getting higher as we get deeper on the deposit. It's actually an ideal underground mining situation. We've got this large rectangular slab of mineralization that dips at 70 degrees. So it's one large continuous zone, 1.3 kilometers along strike, 800 meters dip, and on average 20 meters wide true width. So, I think as you look at other zinc companies that are out there, it's interesting to look at the geometry of their deposits. Some will have a series of different zones at different levels. Ours is one massive, sulfide rectangular slab. So there's the 43101 resource. In the ground, you're looking at almost 5 billion pounds of zinc, almost 1 billion pounds of lead, 12 million ounces of silver, open for expansion. This does not include this year's drilling that we did this season, but certainly a robust resource. Again, 71% indicated. So some of the drilling we did this year, and again, this has some of these larger groups calling us again, even though we've already got 3 invested. You can see some of the intercepts. I mean, we're talking about hole A17-142 that we announced last week. It was 32 meters true width of 11.15% zinc lead, including 23% zinc lead over 11.3 meters. Hole 137, it was almost 60 meters true width of just under 12% zinc lead. It contained 15 meters of over 22% zinc lead. I mean, these are massive intervals, very high grade, and quite unique, I think, if you look again and compare some of the intersections and grades of some of the other companies in the peer group. We've never done a brokered financing, so we don't have any analyst coverage, but there's a Toronto analyst at Echelon Wealth Partners who was looking at the drilling of this season, and he put together sort of a market watch note for his firm, and in it he includes a comparison to some peers, and essentially you can see CZX trades at basically 0.7 cent per pound of zinc in the ground, and on average our peer group is getting 2.5 cents per pound of zinc equivalent in the ground. So, we are, I think, a quality story that's undervalued, trading about a third the average given to our peer group. And I think it's a function of we haven't really done a lot of marketing. We've been focusing on obviously strategics and moving the project forward. So part of our effort now going forward obviously is getting out, waving arms a bit, and letting people know about a high quality opportunity in the zinc space that's very undervalued. You're not buying this thing after it's run up already. You're getting to this thing at quite a steep discount. Upcoming catalysts. So we've just announced the balance of our assays last week. About 70% of the holes this year were done to advance the metallurgy on the deposit, so we'll have the results of that probably in January. And to date, the preliminary results show a clean concentrate. There's no deleterious elements. We have recoveries on zinc ranging from 60 to 90%, and the grades as high as 60%. So we'll have a lot more metallurgy results by Jan, enough to support a PEA, which we plan to complete within Q2 of next year. So these are certainly sort of large benchmark catalysts for the company. I think in time there hopefully will be a re-rating of the stock as well as this sort of information comes out. In summary, Cardiac Creek is one of the largest undeveloped zinc, lead, silver deposits in the world, attracting investment from large base metal miners. Again, it's the project scale, the size, the grade, the district exploration potential in the jurisdiction. High likelihood of other deposits being discovered in the belt. All the claims are good standing in 2025. There's no carrying costs. We have the permits in hand to go underground, and the infrastructure in the area is fairly well established, and we're significantly undervalued versus our peer group. Thanks very much.